Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Hey guys, good morning. Welcome to the Wednesday webinar. It is Wednesday, April 18th. How is everyone doing this morning? Good. Let's see. I will start it off with a question to you guys. Terry, I'm going to bring you in as an organizer. Those of you who are parents before, how do you get 4-year-olds to stay in their room and not come climbing into bed with you? Anybody have a suggestion? Their pediatrician said lock them in their room. I think we're almost to that stage. Anybody been through that before? Just let me know. Let me know what measures you've gone to. Leg shackles were good. we're close to that. And I don't know if you guys saw, and I'll get to business here in a sec, but I put it up on audio cassettes. What does that do, Scott? Oh, I'm not complaining, Lisa. I'm certainly enjoying it. That's absolutely. Let's see here. And then I put this up on Twitter too, and it's kind of the point where, like, all right, these kids got to start sleeping because she's out of her first trimester, so she's got to rest. So we got to keep these two monkeys, which I love more than life itself. We got to keep them in the room. Stop coming in our bed. Just wait. The terrible teens are to come. Yeah. That's pretty funny. Yep. So, yeah, Trish, we're going to have another one. So, lots going on, but all's good. Okay. Let's do the poll. We'll get rolling. Thanks, Terry. We'll get the polls going here real quick. 3 questions get you going. Your screen should change. Are you a client of TradingAnalysis.com? Are you a subscriber, I should say? Subscriber. Okay. Glenn, your screen should change into you should see something on the GoToWebinar thing that gives you a poll. Thanks, Rob. Appreciate that. Yeah, we're excited. Let's see. Yeah, it's going to be crazy. We got the house on the market. We're going to be making a move out of New Jersey. Trisha's pregnant. Markets are volatile. It's a crazy time. Okay. 19% no. Why not? 31% yes. 50% possibly in the future. Very good. Why no's? Why no? Close. Number 1. Okay, next one is your approach to Elliott Wave, my preferred style of analysis. I use it often. I know enough to be dangerous. I'd like to learn more, or I think it's evil voodoo witchcraft. Roland, what are you asking me there? Will be in May. What does that mean? Yeah, Virginia, we've definitely tried that. We're not going to lock them in a room. I can't do that. I agree. Yeah, you're more than welcome to come on over and try to talk to them because they don't want to hear it. We've talked about the baby and mommy's belly and oh my, she needs a rest. And they're like, yeah, that's nice. We don't care. We'll be in May. Gotcha, Roland. Okay, cool. That's funny, Terry. Terry, my organizer, who is kind of officially joined the team, Terry. Terry's a great client and customer, and he's so good at my stuff and so interesting and interested. I basically just hired him. He's helping me a few hours a day, and it's great. So, Terry, if you want to hop in at any time, just come on in. All right, let me see that. So 38%, 39% use it often, 27% I know enough to be dangerous, 41% I like to learn more. Only 1% think it's voodoo. Okay, I love that. That's cool. Final question. What markets do you prefer to trade? Are we trading stocks? I think multiples are possible here. Stock options, futures, and cryptos. Multiple answers are possible here. In the early lead, 65% stocks, 57% stock options, 42% futures, and only 12% cryptocurrencies. It's crazy how few people are trading cryptos. That's amazing. Forex doesn't count anymore, Craig. I should put it up there, but does anybody really trade Forex anymore? I know it's good. It's just, when central banks 8 years ago dropped all their interest rates to zero, that's when I just moved away. I was like, there's just nothing to do anymore here. But, we might get some volatility back. Well, Morali says just the currencies, no pairs. Well, if you think about it, all currencies are a pair. You can't trade the dollar in isolation. It's always relative to something else. So 66% stocks, 56% stock options, 40% futures, and 14% cryptos. Okay, cool. All right, good. Thanks for that. So what else? Other news going on here. We are working hard on the Motive Wave training class. Filming has begun. So this Wednesday webinar originally started out as a Motive Wave only, and it kind of morphed in. It's still sponsored by Motive Wave because we work so closely with them, and they're our preferred charting software, and we do a lot of business with them. And so Terry and I are working on the new I think I'm sharing my screen. Let me make sure. Just charts should be showing. Just grab me if they're not. So we're filming the new Motive Wave training course. As I said, this Wednesday webinar started out as Motive Wave. It's just kind of morphed into trading analysis presented by Motive Wave, I guess, and it's just kind of our weekly get together. So we are working hard on a step-by-step high def kind of e-learning interactive. If you guys have ever taken the Elliott Wave Mastery course or the Fibonacci Mastery course, or any of my training courses where we do the kind of the high def against the green screen with the high quality video production. That's what we're doing for this Motive Wave training course, to show you how we set up the charts, why we organize them in the way we do to accomplish what purposes in your analysis and trading, to see time frames, to see the chart and the market at multiple degrees of trend through the lens of Elliott, how to be organized and effective in your analysis. And Motive Wave is such a beast of a platform; it can really get away from you and be, can be pretty unorganized. It can get unorganized in a very quick time frame. So we're just trying to help you maximize the use of it, and also see the market with high degree of clarity through organization and using the tools that Motive Wave offers you. So be on the lookout for that. Everything else is good. Okay, so the main focus here, guys, is I still think we are in triangles in the indexes. And this has been a little it was looking scary for a while, in that, the ZZ top count that I'm calling it. I still have my beard. I can't shave. That's a social media challenge I put out there. I can't shave my beard until those January 26 highs are taken out. And the market was getting real choppy down here, and I'm thinking, oh boy, are we inside of this wave too? Well, it could be. We just closed at the 61% retracement of the most recent drop here, March 13th down to April 3rd. We closed at the 618. You've got the 786 to contend with. This is your do or die zone right here, all right, for this particular count. And this is the ZZ top count. Obviously, my stupid joke because I've got the beard going for the top in the market. I got my grizzly mode on for the bear market. So if we start to break above 2748, then I would say this count is got to be closed. And this is probably the count. Now, some people have said, is this an A, B, C flat, and we're moving to new highs? Possibly, but typically the rules of Elliott is if this is A, this is B, and this is C, B should have retraced at least 90% of that January 26th drop. So far, B only did I think a 78% retracement. So it's not wrong. It's just not likely. We did a 78% retracement at 2796. So the flat count, which would say A, B, C, we're going to new highs, not likely, not probable. I think the operative count is the triangle, and that's the way that we've been operating with our subscribers pretty much. I think I proposed a triangle back here. Okay, like when we got the first 3-wave push down, I was like, guys, this looks like a 3. And I proposed the triangle. I can show you charts if you really want, but I do believe we were on top of the triangle call. And, you know, we've taken directional shots on this swing, and made some money, made some nice money. But we have since gone into mostly range-bound, delta neutral to slightly positive and theta positive trades. Most of my positions are theta positive, which is short premium. So Microsoft long theta, SPX long theta, Tesla, Amazon is a call credit spread that is not working. I'm gonna have to close that trade out. This SPX is long theta. So we have a lot of kind of butterflies going on here of different durations, just trying to basically collect that theta positive sideways move. Now, on the way up in D, we're facing 2 significant fib. Number one, on this ongoing move, we have a 61% relationship of B compared to D, and in a triangle, alternating waves are often related by a 0.618 relationship. So 0.618 of B gives you a D wave projection at 2710. The 61% relationship, alternate relationship held in C versus A over here. You take distance traveled here, multiply that by 0.618. So we go, let me just bring my drawing tools up. So you take that distance times 0.618. And then project down from here, and that gives you 2850. That was the low right there. So triangle seems to be in a pretty good back and forth rhythm, and I would expect that we get some kind of acknowledgement from that level. On top of that, you have the 61% retracement of this drop right here, which is kind of fortifying that zone. If you go off the top, it's going to be the 50% retracement that we're looking at here. Okay, so the 50% is a 2708 source from that high. Okay, those of you who do Elliott wave actually know the proper place to put the wave of the net the retracement of the net distance traveled of this C, because the C wave actually begins here. It doesn't begin here. The C wave is an A, B, C, so the net distance traveled in C is here. So that's actually the proper place to put the retracement. So altogether, your zone of resistance today, and what I'm very much focused on and how I'll adjust my positions with our subscribers, is the 2695 to 2737 zone. This is your massive zone of resistance right here. And this triangle count is squared up with in all the other indexes. So the NASDAQ, same situation. You have a alternate D versus B relationship at 6955. So B wave multiplied by 0.618 projected up is 6955. Resistance comes in, and then I think we begin to drop away. It's even clearer, more clear in the rut with the triangle. Okay, and the thing is, the rut is more progressed than either the NASDAQ or the S&P. Rut's seen some pretty good strength. So all that means is we've met resistance in a shorter period of time than that. So rut has a 1590 resistance. So today is going to be a key day. We have futures up pretty good here. Futures are up 0.32. That is off their best levels. I know they're up, I don't know, 0.5, 0.6, I think. Let's just take a look at what those futures are doing. So, yeah, futures are up at 27.18. They're down to 27.15. So they're starting to come off here a little bit with 15 minutes into the open. Okay, so that's your focus today. That is absolutely your focus. We took profits on a nice Microsoft position yesterday, which is showing the same kind of pattern, which I'm proposing is a D wave. Microsoft's acting very strong. If we do start breaking out, then okay, you know, we're going to have to do something like A, B, C, D, and E. And the wave 4 is over. Wave 4 will go here, and then you have long opportunities to get on up to your wave 5 push like that. Okay, so the alternate count is if we break on Microsoft through 97.22, we got to adjust. We started out as a butterfly, collected some nice option decay in here, and then we closed it to make it into a put credit spread, and then rode up here. It was good. We had for an $800 investment on my account. I made $770 over the last week or so on that trade, and I just took our subscribers through the math on that one, guys. So that's going from a directional trade into a correctional trade into a directional trade. So Microsoft is looking good. Okay. So that's kind of the theme. So let me just take a look. ZZ count. Yeah, you're right. So let me just take you through the macros, and then I'm just going to shut up, and I'm just going to have you guys ask questions. Like, what do you guys want to do? I mean, that is my sole focus. I don't need to pay attention to much more than that. Let me just give you the macro look here. I'm still tracking a possible fourth wave up here in the bond market to drop down. This is one count. This is my primary, and then my alternate count says we have a little bit higher to go before we ultimately drop down. So I think we're just in consolidation here in the bond market. Not much going on. We did put a pretty aggressive trade on in gold with their subscribers. So we did this pretty crazy bear call ladder trade. This is a trade that if we're wrong and it drops, we make money even though we're long. If we're right and the market moves up, it only goes a little bit, we're actually going to lose money. But it needs to get up around here over the next 3 months, and then we really get paid. Okay, so it's a bear call ladder, and here's the trade. I'll show it to you. Where's Thinkorswim? Okay. So here's the trade. It's so we're short the 125, 130 call credit spread. So you sell the 125 calls, buy the 130s, take that credit, and then buy an out of the money 137 call. It's a really good way to trade the end of consolidations because gold's been in a consolidation for 2 years now. There's a decent possibility that we're wrong and gold drops back into the range. And if that's the case in July, I'll make $270. If gold moves higher, like we expect, and it goes anywhere from 130 to 137, I'm going to hit my max loss of $730. But once we start moving above 140 in the GLD, that's all profit. In this trade, let me just go like this, instrument overlay. This is the gold futures. So let me just overlay GLD on top of it, and that's going to be close. GLD is on the left scale. Gold futures are on the right scale. It's not going to be perfect, but that's pretty close right there. Okay, so my max loss is between 130 and 137 on GLD. So if you look over on the left scale, 130 to 137, this zone right here, 130 to 137 is loss. Everything above 140 is profit. Okay, and if you look at the upside projection of orange C compared to orange A, if this analysis is right, 38% relationship of C versus A is minimum. That is not a problem at all. And more typically, we get to a 61% relationship of C versus A. That's at 1543. That puts me at 148 in the GLD market. And if you look at the time frame, this is certainly reasonable. That takes you into July or August, and I have July monthlies. So if we get up to my 61% projection at 148, that's going to be a profit of about $1,800. Okay, so my thought process here is if gold breaks, it's not going to go up just a little bit. I think it's really going to go. And if I'm wrong and it falls back into the range, we make money. So it's kind of a fun trade. I did it a while ago in Green Mountain Coffee, and we got paid on it. Okay, so that's gold. Here's crude. Don't really know what's going on with crude here. I guess we're up in a wave 3 here. So we should have a pretty good move up to about 73. It's really pretty choppy here. We're looking at 1 2 1 2 here. So we're in the kind of the danger zone of a third. So blue 3 of orange 3. So this is really where the real price extension should happen. It's when you start finding yourself in this position, you got to kind of consider alternate wave counts, because how often you get a third move? Not very often. Okay, that's where the big price gains are made. So we have a 1 2 1 2 going on. So if that's the case, then we should be able to move up to 73 bucks. If we start to fizzle out, this count is wrong, and we are likely still inside of this B wave correction, looking to just correct and waste more time in here. Okay, so crude I think goes higher, but not completely positive. Can't tell you what the future holds for sure. Yeah, Richard, you can still get into that gold trade if you want. Yeah, I think I'm break even. It's all the way out in July, so so the decay is not set in yet. Okay. All right, what else you guys got? What do you want me to hit? Dollar, sure. Yeah, dollar is a lot of people are trying to get bullish on the dollar. It's pretty funny. I just listen to everyone saying, "Oh, dollar's got a bottom, got a bottom, got a bottom, got a bottom. Dollar's in a low, raising rates." And this is why I love Elliott. I'm just sitting back. I'm saying, dude, there is nothing impulsive on the upside about the dollar count. There's nothing. And that's why I kept saying we're going lower. And I'm very much in the minority there to say the dollar's got another leg lower. And what's funny is when and if we do break lower down into 505, that's going to be when everyone says, oh, dollar's toast, Trump is crushing the dollar, our credit quality is absolutely destroyed. And that's when bearish sentiment is going to be feverish. And at the same time, while everybody's trying to tell me you got to buy the dollar, there's no evidence to do so yet. When we break down and test those levels, that's when everyone's going to get super bearish, and that's when you and I are going to look on the other side and say, now is the time to buy the dollar. So I still think we have one more drop down. All that being said, if we don't hold this massive floor of fib support in the dollar, this weekly chart will show you that's a big issue. We really should hold 88 to 85. If you start breaking down through 84.10 in the dollar, oh, you're in big trouble. Dollar is in big trouble, and the bears are right. Okay, so I think near term we have a little bit of a push down, and then at that point, this is where we really need to hold. And that's kind of like the gold trade. You know, I'm looking for a. It's not like I'm just long gold and saying we're going to get a $500 move up in gold. If the dollar breaks down and we destroy this wave count, you know, gold's probably going to be ripping and we're going to get paid. So it's almost like a hedge against this count. Tesla, sure. You know, Carson, I'm not doing anything with silver. It's just been so terrible. I haven't looked at it forever. Let me just take a look. Yeah, same thing with gold. Just, you know, it's like, like, what is that? What happened, silver? You know, it just doesn't move anymore. If we get above $18, then we can talk. Okay, let me just go down here. Well, FXE looks for the next leg. Ready to take the next leg up, right? Okay, that'd be the same thing, Rob, as the dollar down, the dollar index down. Let's take a look. I don't know if I'm tracking IBM. Let me go in order based on your requests here. Let me see. I'm just looking for crude oil. Yep, FCX. Let's take a look at Freeport. I haven't been tracking him lately. Freeport. I don't think I have any wave counts. No, I don't have any wave counts on Freeport, which is interesting. That really looks like the materials. The XLB has done a big free wave drop. Not that impressive. I mean, percent change has been great, but I'm just doing a quick wave count on that. Decompose. I'll let Motive Wave do the work. There we go, Motive Wave. Good job. And Motive Wave does have automated wave count in it. It's pretty good. I don't rely on it all the time, but it's pretty good. I mean, that's a big percent move, but considering how far we've come, not a bad looking chart. You might have another move up. I mean, you're talking like an 80% move here. 18 into 26 or whatever that is. 7 as a percent of 18. I guess that would be 50% or 60% or whatever. You might have a move up there into that zone. So that's something to keep an eye on. Everybody who is hooked into my workspace via the repository in the cloud, you will be getting this analysis now. So everybody who has Motive Wave and who is enrolled in our repository program, which is basically syncing over the cloud, as I do my analysis, you get updated immediately, which is pretty awesome. I'll keep an eye on Freeport. Thanks for that. What else? Okay. Alan, since I'm trading IRA, don't have approval to leg out of a trade. You do. You just have to close the short options first, Alan. So should I close? Oh, it looks like, there you go, Terry. Thank you for answering them already. Yeah, so just be sure to close your short legs first so you're not naked short options. Luis says, what do you mean when you say third of a third? Sure. So a third of a third is when the heart of the gains are made, right? So your basic Elliott wave, your Motive Wave is a 5-wave move, right? Okay, right there. As you look inside of this count on smaller time frames, it's going to break down into smaller waves. Waves 1, 3, and 5 break down into 5 waves, right? And waves 2 and 4 will break down into corrective waves like a 3 or something similar like that. So inside of wave 3, it's going to be a 5-wave move. So at a smaller degree, in a smaller time frame, you get down to a 120-minute chart or 240-minute chart. This right here is your third wave, wave 3, within a higher degree third wave. That's when the big gains are made. As we point over to Freeport, this is your third of a higher degree third wave. Make sense, Luis? And we're open. Virginia, I'm reading your response here, Virginia D. Oh, we are locked. Trish is locked in with a. They think it's a game. You've taught them it's okay to get into bed. We have. You'll take a lot of persistence and energy to reteach them. Every child needs to know limits. Setting limits is an act of love. I totally agree with that. Perhaps creating a new bedtime routine would help. Habituate to a new pattern. Praise and high-value rewards for staying in bed to reinforce new behavior. Virginia, you sound like you know what you're talking about. Well done. Thank you for that. EEM, sorry, Rushab. It's just in a triangle. I do think we have one more leg higher in emerging markets. Julie, I don't think there's much relation between the dollar and Bitcoin anymore. Scott Good, I'm glad you're reading Intermarket Analysis by John Murphy. Such a good book. Love that book. John, do you buy S&P puts or sell calls now? To be short, John? Cryptos, yeah, we didn't even talk about cryptos. We are long cryptos. We have orders and we're long half positions, and we are looking for the next leg up. We're in a nice triangle here in Bitcoin, looking for another move up. So, yeah, we have long positions going with the cryptos. Yeah, let me take a look at Tesla for you. Sure, I know you're asking. Ooh, Freeport, there we go. Pretty good. Right. Oh, I didn't even tell you. Let me do Tesla and then we'll come back. I still think Tesla might be in a bull situation. I think we might be in a higher degree fifth. So there you go. We're having that discussion of a third, right? So this is wave 3 of a higher degree fifth. This is a wave 3 of a higher degree third. See, and this is the mind trip. This is why Elliott wave is so awesome. This is a third wave of a higher degree third. This, right? Actually, I'm going to adjust that. Yeah, that's fine, actually. This right here, where Tesla went from $89 to 180, it basically doubled in percent terms. This is a third of a higher degree third of a higher degree third of a higher degree third. This right here is where the gains are made, and that happens every couple years, 5 or 10 years. Now, after that, you get all of this slop and shop. Okay, so now we just did wave 3 of a higher degree fifth wave. Okay, and this is how you get to be very powerful with Elliott. If you just take a look at the degree, this blue parentheses, that's the intermediate degree. 5 wave blue parentheses intermediates are going to make up your higher degree primary wave right here. And as I click on this orange circle and I go degree, there's your primary. Primary is made up of 5 smaller intermediate waves. The trend waves 1, 3, and 5 of intermediate are made up of 5 smaller minor waves. Minor waves are made up of minute waves, minute of minuet, so on and so forth. So anyways, I think we have another push up, and I know the bearish sentiment right now is quite high in Tesla. I think it's crazy to bet against Elon Musk personally, but whatever. I'm just looking at the chart, and if we continue to hold this zone of support, I think we have one more fifth of a fifth move to go. I mean, that's a huge percent move. All we need to do is get up to 383, 400 area, and that would suffice for wave 5. But I do think that while we're pulling back in a corrective structure, you're above the 280, 275 area, it could be worth a long. Your risk is probably $30 below this low in order to make, $100. I'm glad to see Netflix down. Shit, it's not down anymore. But we have an earnings trade going on with Netflix. We booked half profits yesterday, and we have a butterfly going on in Netflix. We'll be up some money here this morning. I'd like to see Netflix back away to the body of the butterfly. So here's our position right here. I've got a 7 by 14 by 7 put fly centered around 330. So I'd love to see him back up a little bit. We'll see if he wants to do that. He started off down and is starting to move back here a little bit. Amazon's up. We're going to have to adjust that trade. And the overall market's kind of flat, 27.13. Here's our zone of resistance. This is the do or die zone right here for shorts to continue range-bound trading. I'm actually more focused on the sideways price action in here, but we're coming after it, so we got to watch to see if we do that. So I'm going to need to adjust some positions. I'm going to go to work. Hopefully that helps, guys. Have a great rest of the week. And Paul, both are good. Murphy, Intermarket Analysis 2004. Definitely read them both. Read them both. The 04 and the 09 book. Yeah, Virginia, good point there. I know they're sugar fiends like their dad, so, and my wife gives them too much sugar, so I think that's a good point too. Love your vlogs. Thanks. Yeah, oh, perfect. Oh, I have a new vlog up. You guys want to see that new vlog? And then I should go to work. I'll drop that link in there. It was kind of fun. It was Oh, started out at, I don't know, CNBC, and then actually went to YouTube, and there's like this Russian model, and I asked my wife, I was like, can I? Oh, and then CNBC's yelling at me.
Would you please get the audio?
Like this Russian model. I asked my wife, can I put this Russian model next to me in the click in the start in the thumbnail? And she said, fine. So I'm like, okay, thanks. All right, there's a link to the new vlog. When you guys are there, if you like it, hit that little thumbs up. It helps the ranks go up. All right, guys, leave it there. Have a great rest of the day. And be sure to check us out at TradingAnalysis, or else you have to wait all the way to next week for this great analysis. See you guys. Have a great